Bitcoin has made a solid recovery since its lows on the 21st, where it bottomed out around 80,500, and since has moved up almost 14% to where we sit right now, which is just under 92,000. With two major events coming in the next 2 weeks, which is QT ending and the FOMC meeting where rate cuts are expected, I wanted to go over the real expectations on how these events will impact the market going forward. So stick around, it's going to be a good video. All right, guys, I first want to start out with rate cuts and then I'll go into QT. But I want to talk about rate cuts first because I believe they have already affected the market. As you can see right here, we bottomed out on the 21st, like I said earlier, at 80,500. And the reason sentiment flipped at that point was because New York Fed President John Williams made comments on rate cuts on the 21st of November. And what he had said was, I still see room for a further adjustment in the near term to the target range for the federal funds rate to move to the stance of policy closer to the range of neutral. And this had completely flipped sentiment. And as you can see here, before he had made those comments, the probability of a rate cut was at 30%. And just not even a week since these comments, it has flipped to almost 85%. That also has to do a little bit with the jobs report data that had come out that was bullish for rate cuts to happen. But the reason I bring this up is because, as you can see here, and as I said earlier, we have made a 14% move up. But it started with that news of rate cuts. And I always say in this market that the market prices things in that it believes will happen in the future. As you always know the saying, buy the rumor, sell the news. And the reason that I bring this up is because there's a chance that even if we get a cut on the 10th, that most of that cut is already priced into the market. And what's really going to matter is what else is said during that FOMC meeting. And I'm going to get into that a little bit later on into this video. But before we do that, I want to go into quantitative tightening because that happens before this meeting on the 10th. So as you know, the Fed stated in their last FOMC meeting that they would end quantitative tightening on the 1st of December. Now, I want to make a big point here that just because quantitative tightening is ending does not mean that QE, quantitative easing, is starting. So they're not going to start adding money to the system immediately once they stop tightening and restricting the system. And as you can see here from this chart right here, this is during COVID when they printed the trillions and trillions of dollars. And in 22, around October, is when they started QE. And as you can see, they've been reducing and reducing and reducing and reducing. But this is the big point I want to bring you to right here, is these last couple months in July, they haven't really been reducing that much. So even though QT is going to be ending, it's not going to be a massive shock, and there's all of a sudden going to be just endless amounts of money available in the system because they've been reducing how much they've been taking out of the market as over these last couple months. As you can see here, it's almost flatlined at this point. And the reason I bring this up is because obviously this is big news for the market for us to start moving into an easing environment, which I do believe we will. But I also want people to keep in mind that this is something that can take months and months for the market to really feel. For example, the Fed might start easing 2 months from now, which would be very soon. But the effects of that is not going to be felt instantly. Now, the market might react quicker because it always is forward thinking, but the real effects of that might take, even if they end, like I said, in 2 months, 3, 4, 5, 6 months for the market to actually feel the effects of the quantitative tightening ending and the easing starting. Now, before we go any farther, I would just like to say that clearly I am a new channel and I'm trying to find my footing in this content. So if you guys have made it this far, if you could please just like the video or subscribe, I would greatly, greatly appreciate it. Or even if you have some criticisms for the content, by all means, please comment down below. I'd be more than happy to respond or even make videos based off your suggestions. But to get back into the video, I did want to say that I don't want to be completely bearish here. We could still see additional pumps due to these two events that are happening in the market, because at the end of the day, they are bullish monetarily. But please remember that in the bigger picture, we are in a downtrend with 2 weekly closes below the 50 weekly moving average. Now, you can see right here, we are still roughly a 12% move away from the 50 weekly moving average, which if you've watched my previous videos, you know I've been saying over and over again that I firmly believe that we will go to this 50 weekly moving average, and that is based off this exact situation happening in the last two bull markets as they ended. As you can see here, we came down to test the 50 weekly moving average, went up, crashed down below it, came back up to retest it. And if we go even a little farther back, this is 2017, same thing happened. Came to test it, went up, crashed down, came back up to retest. And we are in a very similar situation right now. We came down to test it, we went up, crashed back down. So I do believe that we will make this move back up to this moving average right here at some point or another. And could that happen based off QT ending, and if we get a rate cut at the next Fed meeting? I believe that is 100% possible, but it's not guaranteed. And another thing I want to go over real quick is clearly we have a lot of liquidations building up to both sides, but I do believe this chart is a little bit misleading, because as it seems on this chart that longs and shorts are equaling out. If you go to the heat map and go to the 3-month chart, you can see right here, once it loads, that we have so much more liquidation to the upside. This is all this liquidation to the downside right here that I just showed you. But we have so many pockets of liquidation in shorts that are still in this market that could cause a short squeeze and cause us to move up to that 50 weekly moving average. As you can see right here, right up to that 102,000, we have huge pockets that we could hit, liquidate a bunch of people, and cause the price of Bitcoin to shoot up, hopefully bringing Ethereum and altcoins with it. Now, to finish, I want to talk about something that I believe most people might be missing. We know for sure QT is ending on December 1st. We know there's a very high likelihood that there's a rate cut coming on December 10th. As I showed you in the graph earlier, there's an 84% chance of it, especially with the recent comments from Fed chairs. It looks extremely likely, and as you can see, the market has already priced this in, at least a bit. Maybe not completely, but at least a bit. But the part that I want to talk about that I believe most people are missing is that the real thing that's going to fluctuate and change this market is going to be what Powell says in his speech after they either give the rate cut or don't, which, like I said, is very, very likely they do. If he comes out and then he's very hawkish about the future and he says, well, I don't think we need to start QE at least for another 6 to 8 months or even 12, and I don't believe that we need to cut rates until later in next year because inflation is ticking up too much, I would expect that this market sells off and we go down below even $80,000 where we got here, and even possibly setting up a lower low below the $74,000 mark right here, if that happens. And this is not financial advice. Please read the disclaimer down below, but I could completely see that happening. Now, on the flip side, if he, during his speech, says, we see the need for QE to start relatively soon within the next month or two, and we also see the benefits of continuing to cut rates due to the weakening in the labor market, that's when I could see this market jump up to retest this 50 weekly moving average, which, like I said, we're 12% away. I could completely see that happening. Now, depending how dovish or hawkish he is in his speech, if he is very dovish, there's a chance we could flip this 50 weekly moving average back into a support and start retesting these zones of resistance around 108K, 110, and 116. And from there, we would have to change and adjust the way we're looking at the market going forward, because if it starts going above 116, then we'd have the possibility of potentially going in to a new all-time high. But that's getting very far ahead, because as we've closed two weekly candles below this 50 weekly moving average, right now it is my understanding that we are ultimately heading into a bear market. But those are the key things that I want you to keep an eye on as we get into these major events that are happening for the market. Watch out for what happens when QT ends, and keep an eye and watch Jerome Powell's speech after the rate cut is either announced or if they don't cut at all, because I believe that's going to be what really decides what way this market moves going forward.